The country's food and beverage sector will need to double in size over the next 5 years to meet demand from hotel and retail projects currently under development in Dubai, according to research firm Euromonitor International. About 19,000 extra food and beverage outlets are expected in the UAE by 2019, according to the research, which also shows that there are currently 18,345 outlets in the Emirates. Euromonitor added that high growth rates witnessed over the last 5 years are expected to continue over the 2014-19 period, with sales values expected to show an average 8% annual growth. Last year, 11 million tourists, a rise of 10.6% over 2012, checked into Dubai's 611 hotels and hotel apartments. By 2016, Dubai is expected to add 139 properties, including 91 hotels and 48 hotel apartments, according to the Department of Tourism and Commerce Marketing. Restaurant chains, which in the UAE account for more than 1/3 of total sales, or 11 billion dirhams, are growing on the back of higher consumer spending, as dining out is becoming a favourite activity for many UAE residents, who spend an average of 841 dirhams on restaurant meals per month, the highest in the Middle East market. Etihad Airways has lifted its stake in Virgin Australia last week to the maximum approved limit by Australia's Foreign Investment Review Board. Etihad raised its stake in the Australian airline to 22.9% after purchasing 1.7% of shares, according to reports that appeared in Australian newspapers. Etihad's president and chief executive, James Hogan, was also appointed a non-executive director to the Virgin Australia board last week, according to a statement on the Australian Stock Exchange. Etihad previously held 21.24% and appears to have increased its stake under creeping provisions from the FIRB, although Etihad will have to seek approval from the FIRB if it is to increase its stake further. Virgin Australia offered a board seat to Etihad after it backed a $300 million capital investment last year. Board seats were also offered to its other major airline investors, which include Singapore Airlines and Air New Zealand. The three airlines control about 70% of the Australian airline. And Drydocks World, the international service provider to the maritime, oil and gas and energy sectors, has received the Lloyd's List Shipyard of the Year award. The award recognises shipyards and shipbuilders that have consistently met the needs of its customers, with entries judged based on the ability of the yard to offer cost-effective and quality services while keeping a keen eye on safety. For shipbuilders, criteria include the on-time delivery of quality vessels that cater to buyer requirements and showcase innovative designs while adhering to high environmental standards. Drydocks World received the award for its ability to innovate and for the use of groundbreaking technology, design and service across all sectors, which led to a meaningful advance for the shipping industry. Receiving the award, His Excellency Khamis Juma Bouamim, chairman of Drydocks World and Maritime World, stated that winning the Shipyard of the Year award was recognition of our positive contributions to the maritime sector, which will drive us to continue to implement high standards in all aspects of our business. The Shipyard of the Year award is considered to be one of the most prestigious tributes in the marine sector. The US dollar continued posting gains in trading last week as US equity markets also set new record highs. The Dow Jones Index closed the week at a record high of 17,810, while the S&P 500 stock index similarly closed at record highs of 2,063. Commodity markets also posted gains in the trading last week, with gold closing above $1,200, which was 1% higher on the week, while West Texas crude snapped a 7-week skid to close its first week higher at 76.51 levels. To find out more about this and what to expect for the upcoming week, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari, Middle East.
Well, as expected, the US dollar continued building on its gains that we've experienced from the start of this month. The US dollar made gains against the euro, the British pound, and overall the dollar index has moved up above 88 levels, which is at close to near all-time highs that we've seen in the last 4 to 5 years. Overall, we're expecting the US dollar to continue building gains in the week ahead. We're going to watch for the US dollar index to target 88.40 levels up in the week ahead. Overall, if we look at the euro is going to expect to continue to move downwards against the US dollar. We're expecting the euro to test a channel of 122.40 to 122.70 on DGCX in the week ahead against the US dollar. Now, what we will be watching for is the OECD economic outlook for the Eurozone coming up. We have several key speakers, including Draghi, speaking regarding the Eurozone on Thursday, and we have some inflationary data and some German GDP which we're expecting to continue to weigh down the forecast for the Euro. Overall, from the US, we have the US GDP reading expected to come in at 3.3%. That's below the previous reading of 3.5%. And overall consumer confidence figures are expected to come better than expected. So we continue the positive sentiment to take US dollar forecasts higher for the week ahead, and definitely look at further downsides for the Euro.